you then. Okay, so welcome to this afternoon's update on apprenticeship funding with e-Memoir and White Rose Group. This time we are joined by Beach Kaczmarczyk, Director of Learning Curve Group. We'd like to keep the sessions as interactive as possible, so feel free to use the question or chat facility. Keep the questions coming. Thank you, Beach.
Good afternoon and thanks very much, Marek, and particularly welcome to those that might be the first time they've attended one of our webinars. To those who are regulars, welcome back. Over the next 50 to 55 minutes, as Marek said, I'll be giving an update on apprenticeship funding based obviously on the most recent documents that have come into our possession as providers and as employers, and obviously those conversations that we've been having with both providers and employers in the light of those documents. So that's what we're going to be doing in the next 50 to 55 minutes. As Marek says, I'll prompt him to move the slides on. You'll get copies of the slides and of the presentation after today's webinar. If you're not able to stay for the full session, don't worry about it. You can obviously replay this back later. And those of you that are listening in, please make sure you share this with your colleagues, particularly those colleagues that haven't been able to attend today. So if we move on to the next slide. In terms of the overall policy, and I think we're all fairly aware of that policy, the key things that we're looking at here is what's going to happen after the 1st of May, and in particular with new starts, on the assumption that everyone understands that with those existing apprentices, whether on frameworks or on standards, that those contracts will carry on after the 1st of May until their completion under the rules that apply now, and obviously under the funding formula and the way it works at present for both frameworks and for standards. But I think the key thing to note there, and this is just a summary of the main changes that are occurring, obviously is the introduction of the 15 funding bands, which will apply after the 1st of May to all existing frameworks and standards, and of course standards will gradually replace the frameworks, with the upper limit for each one of those bands ranging from £1,500 at the bottom to £27,000. Remember, those bands provide the maximum for the purposes of co-investment and also for what will be taken out of digital accounts if you're working with a levy-paying employer. It's up to us as providers to negotiate a price with the employer for each apprentice, and obviously the bands will provide if you want, the limits for what we're going to negotiate as a price. But please remember, when we mean price, we mean the price that's going to be charged for the cost of training and all assessment. And in particular, this is relevant for standards, where obviously the endpoint assessment must be included in the price that you then agree with the employer. The assumption is that where employers are not levy paying, or where there are levy-paying employers that don't have sufficient funds in their levy accounts, then there's going to be a 10% co-investment. And obviously that means that the employer will contribute 10% of that cost, and the government will make up the remaining 90%. And this obviously relates not only to non-levy-paying employers, which of course many of you have applied under the procurement to supply from the 1st of May, but also to levy-paying employers that got insufficient funds in their accounts. And by the way, I'll come back to that later on. There are obviously additional payments and special arrangements for example, 16 to 18-year-olds. And we know that because it's critical that we get participation of 16 to 18-year-olds in apprenticeships, that both providers and employers will be receiving £1,000, and obviously that £1,000 each will depend, first of all, on how long the apprentice stays with us, and also that there will be, in this first year, some transitional payments of an extra 20% uplift based on the maximum funding band for that framework, and this will only apply to frameworks, by the way, for young people, and that will extend to include 19 to 24-year-olds in care or with education and healthcare plans. So I think it's important to sort of bear that in mind. Now, as we're going through this session, it's going to be important that we realise that when it comes to the 20% uplift for frameworks, remember it's only for frameworks that applies to 16 to 18-year-olds, that 20% is set on whatever the upper band limit is for that particular framework. So if the framework only had an upper value of £6,000, you'd be getting an extra 20% of the £6,000. It's not based on the price that you negotiate with the employer. So just be aware of that. That's how the 20%. And I'll come back to that. There are obviously very specific circumstances for very small employers. That's employers who you're recording on the ILR using the appropriate code as being less than 50 employees. They will have 100% of the training and assessment costs for any 16 to 18-year-olds that they employ as apprentices, and that also extends to the 19 to 24-year-olds in those special circumstances. Additional learning support I'll come back to. The disadvantage uplift, which obviously is critical for those of you working particularly with apprentices from deprived or disadvantaged postal codes, I'll cover, as well as the English and maths. And of course those are all what we call additional payments that obviously will be treated in a way different from the price that you negotiate with the employer. So the price you're negotiating with the employer is the price for the training and all assessment, including endpoint assessment. A lot of these additional payments are not part of that price, and obviously please remember that. One other point to note generally in the policy is that levy funds and co-investment can be used to fund any individual who's undertaking an apprenticeship at the same or lower level, but there are conditions, and that in particularly applies where it is the acquisition of substantive new skills. I'll come back to that later on because I think that's an important point to note. And I think one other thing just to note on that, that when we're talking about prior levels of achievement on apprenticeships, if we follow the rules quite clearly, if an apprentice starts a new job in a different occupation, the Skills Funding Agency will fund them to do an apprenticeship at the same level as previously achieved. So that could be if there's a job change. If it's a framework, it can be at the same or lower level if the apprentice needs to be multi-skilled, or if learning is materially different to that previously achieved. So it's acquiring substantively new skills. One point to note, by the way, is the Skills Funding Agency will not fund another standard at a lower level than that already achieved. So slight difference between the treatment of standards and frameworks to just be aware of. Move on to the next slide. We'll look at the things that directly affect levy-paying employers, because obviously that's going to be a key feature of what happens after the 1st of May. So let's move on to having a look at what specifically applies to levy-paying employers. The next slide.
Okay, Beach, I'm just going to move the slide on for you now. Just checking to see if you noticed any of the questions I just sent through as well.
I've picked up the questions. The first question from Sam. I'm just going to make sure before we move on, I pick up those questions.
Super, no problem. Just checking. That's brilliant. I'll just move on to the next slide there as well. Then, sorry. There you go.
Right. The key features of obviously the levy, which is going to apply to large employers with pay bills of over £3 million, and obviously specifically here we're looking at in England. Just be aware again that this is, although we've got different arrangements for Scotland, Wales, Northern Ireland, and England, we're obviously talking about that proportion of of an employer's staff whose main place of work, and they spend at least 50% of the time in England, is critical. What goes into the digital account, obviously we're now talking about the apprenticeship service as opposed to the digital apprenticeship service. The funds in digital accounts will again depend on what proportion of the pay bill actually is paid to people who are living in England and whose 50% of their work time is spent in England. Those funds will then be topped up by 10%, and we know also that those funds will be there for 24 months rather than 18 months. That's the expiration date that's been increased, and obviously this only relates to new starts after the 1st of May. The only other point to note there is that for the first year of operation, there will not be any ability to transfer a proportion of an employer's levy to either another business that might be in the supply chain or to an apprenticeship training agency. That will not happen until 2018, and that's very clearly going to stay still the case, and that will only be limited to 10% of the funds that they've got in their digital accounts. So those are some key features of the way that the levy is going to work. I'm just looking at another question, and there's a key question that's coming here that's just been posed to me, is can an apprentice also undertake a degree while on the standard apprenticeship? Only if that is part of the higher apprenticeship program that they're doing. So again, you've got to make sure that when we're looking at funding here, that we're only using the appropriate sources of funding for an apprenticeship, and that can include, of course, a degree if it's part of a higher apprenticeship. The other question that's been posed here is, if we look at the qualification requirements in terms of what relates to a second apprenticeship at the same or lower level, that is in the common funding rules that apply to all apprenticeships that were published at the very beginning of February. So Kim will send you the information that relates to that. It isn't quite as clear as straightforward as it was before. In fact, there's a little bit more clarity about that, but nevertheless I think it's important to remember that we are essentially being funded for the same or a higher level of apprenticeship in most cases, and only when you can prove that it's a multi-skilling that's required, or if the learning is materially different to that previously achieved, can the person be funded for a lower level, and that only relates, of course, to frameworks and not to standards. Okay, if we move on to the sort of details now that I want to pick through, which obviously we know a lot more information about. Thanks for the questions, by the way. Okay, so let's focus a wee bit on the bands and obviously what this means in terms of pricing as opposed to obviously costing. As you know, there are 15 bands that are going to be used. Currently there's 6 with the standards and the framework, the Trailblazer standards pilot. And those will range up to £27,000 we describe, and that will apply to all new and existing frameworks and standards after the 1st of May. Remember, it's the maximum within the band is the amount that can be transferred or used for the purposes of funding an apprenticeship in the digital account. There is no lower limit, by the way, because the prices have got to be negotiated around what you think is a reasonable understanding of the employers, or on the employer's part, of the cost of both training and assessment, including endpoint assessment. The other reason why the funding bands are important is they cap the maximum price that the government will co-invest for any non-levy paying employer, or where a levy paying employer has got insufficient digital funds and is using the co-investment approach for this. So the employers will negotiate those prices with providers within those funding limits. And I think for many of us as providers, that is going to be an area of some significant new sort of experiences and different behaviours there. One thing to note, by the way, is for any employer providers that are listening in, or providers who are going to be delivering apprentices to their own employees, the initial price recorded in the ILR field will be the estimated cost of training and all assessment, and obviously that can then change in the course of the actual practicalities. At the end of the program, you must record the actual cost of training and assessment, including endpoint assessment. One question that's already been posed: does the total price include VAT? Yeah, it does not include VAT. So it's got to be exclusive of that, and also it does not include the cost of English and Maths. So remember, that's a separate funding that comes direct to the provider, and it also does not include any of the additional payments that we talked about there for being a small employer working with 16 to 18-year-olds, or any size employer working with 16 to 18-year-olds. So let's move on to the actual bands so you can see what the 15 bands are. And they're the 15 bands. And again, they set the maximum for any of the discussions you're going to have with an employer. An employer might decide to pay you more. So, for example, you might be offering an employer a Band 7 framework or standard where the band upper limit is £5,000. The employer might be willing to pay you £6,000 because of the value they attach to that type of training. Any payment which is above the band maximum is directly paid to you from the employer. That does not come through the digital account, and certainly not through the co-investment, because that's what the funding band set. So let's move on from that, Marek, to the next slide. because this has got significant implications for things like the way in which we will earn the funding. And I think once you've negotiated the appropriate price, understanding obviously what the funding bands mean, then obviously the earnings methodology is critical. Again, things that you already know, but the qualifying period for a start is 42 days because we're assuming that in most cases the apprenticeship framework or standard is a minimum of 12 months plus 1 day. There will be some exceptions, for example, where there's a break in learning. So for example, if you've got an apprentice that has a break in learning and then only needs 2 months to complete the apprenticeship, well, we would be applying the qualifying period there of 14 days. So that's obviously very critical. If a learner completes a learning aim, remember they will be counted as having met the qualifying period for that learning aim if they've actually completed the learning aim in that time. Now, one thing to note there, which I think is something that we're getting more used to, and that's quite important, is that the earnings methodology is based on 80% funding on what we call monthly installments, and that's obviously the lower of whatever the price or the funding band maximum is that you've negotiated with the employer. The completion element is 20% of the lower of the total price of the funding band maximum. So that's something that you've got to again factor in to obviously your business planning and whether the number of starts that you're going to have and the number of continuing learners you're going to have from the old arrangements, the old frameworks and standards, actually means that the two sets of funding together, that's separate contracts of course, means that you've got enough resource to be able to support those apprentices. So again, it's important that the bands are understood, because obviously it depends very much on the pathway, and those pathways might have significant differences between, say, one pathway in a framework and another, and that was obviously one of the issues that was raised when we first looked at these bands. So these bands are now fairly well clearly finalized for all the standards and all the frameworks. And if you've got any questions, for example, Arthur, if you're looking at this, have a look at the bit of software that's available to you. And I know many of you have been using the funding apprentices system to help you with this, FAST as it's known. Use that, because that's a good way of modeling what will be the different values there. Monthly installments are equally spread over the planned number of months. Remember, there's no double payment anymore in month 1. That's gone. That obviously is not going to apply after the 1st of May. And that clearly means that you've got to have the learning start date and the learning plan date in the ILR clearly marked out, and that will then determine how the 80% is then spread over the length of that particular apprenticeship, whether it be a standard or a framework. The other thing to note is that if you are then receiving the 20% uplift for a 16 to 18-year-old on a framework, remember it only applies to frameworks, not to a standard, then again that will be earned by you in the same pattern as the monthly installments for the actual framework, and of course on completion of that framework. The English and Maths, by the way, can also be spread over the course of the difference between the learning start date and the planned ending learning date that you put within the ILR, but here there's no completion element, so it's 100% funded on installments. In other words, it's on program. So you can see that in the next slide, which will show that. Here's an example of how those earnings will come into your organization. And you can see here the apprenticeship installments. Let's assume this is a 13-month apprenticeship. The apprenticeship installments can go across every month. The completion is in the last month. The framework uplift, if it's a 16 to 18 on the framework, is again mirroring the installments with the completion element again. So remember that there's a completion element attached to the framework uplift value. The additional payments for being a young person or whatever are coming in after 3 months and a year, 90 days and 365 days. Remember, that's related directly to making sure that the apprentice is retained. And you can see here that we're doing the English first. That's been done over 4 months, and therefore we take the value of the English, £471, and spread it over 4 months. There's no completion element. And the same if we're doing maths at a later date, you can see how that is also allocated 100% on the what do you call it, the maths instalments, the 100% on retention. One point to note, by the way, is the 16 to 18 payments. You mustn't confuse, there's two types of payment for 16 to 18-year-olds. There's £1,000 that's paid to you, the provider, and the £1,000 that's paid to employer. Those are paid out at 90 days and 365 days, or 3 months and 12 months, Lee. But the uplift, that's the 20% uplift that's attached to the maximum value of the funding band that that apprenticeship framework is in, is actually earned over the course of the number of months that you've actually planned the framework. So remember, that is not quite the same as the two £1,000 payments, because there's got to be an element there of retaining the learner, because it's 20% of the maximum of the value of that funding band, and there's also got to be an element that's going to be attached to completion. So hopefully that's clarifying that for you, Lee. They're quite two separate payments, and they will be done in different ways. That's great, thanks, good question. We move on to the next slide. The co-investment rate. Now, there's been some questions that I know you've already posed here. Remember, the co-investment rate really applies predominantly to non-levy paying employers. It's slightly different when we're looking at levy paying employers who might not have enough funds within their digital account to actually to complete the payments for an apprenticeship. So for non-levy paying, they're expected to contribute 10% of the cost, and it must be a payment in cash against invoice. I'll come back to that later on. And then there's a 90% if you want co-investment from the government. For levy-paying employers, it's slightly different, because where an employer's digital account has got a positive balance, but the balance is less than what the monthly earnings are for an apprentice, in that case, any co-investment will be at 10% of the remaining earnings up to, obviously, the funding band maximum. And, of course, the employer will make 10% contribution, 90% will come from the government. I think in the first year of this new system, the expectation is that the employers will pay their co-investment share directly to training providers, but obviously ultimately this will be done through digital accounts in future. One point to note, by the way, there's no co-investment required if the apprentice and the employer are eligible for extra support for small employers. In other words, if it's an employer with less than 50 staff who's taking on young people or 19 to 24-year-olds that are eligible to be funded as young people, then obviously there's no co-investment rate, because there's 100% funding from the government. So hopefully that will satisfy that particular aspect. You need to record the co-investment received from the employer on the ILR. I think you all remember the code is PMR. To be eligible also for the completion payment, you must record the co-investment from the employer and report the cash value in the ILR. So therefore, if you've got any problems collecting the co-investment from the employer, it will have implications for your monthly installments, but also for the completion element. If you've not recorded the necessary co-investment in the ILR, monthly installments could be withheld, just remember that, until the payments are received from the employer. Now, that's very critical, so there's a real incentive here to make sure we collect the monthly payments in cash from the employer as part of the co-investment. And that applies to levy-paying employers for any funds that exceed what they've got in their digital accounts, as well as the non-levy paying employers. The Skills Funding Agency will provide you with monthly reports to show which apprentices have been fully funded from the employer's digital account and which apprentices will need co-investment. And that obviously applies to levy paying employers. Move on to the next slide, Marek. Now, what about the additional funds that we've talked about and you've already asked questions? One of the things I think is critical is to see that there is support for employing young people, that's 16 to 18-year-olds, on the first day of the beginning of their actual apprenticeship learning. This applies to all employers, whether large or small, employing, whether they're levy-paying or non-levy paying. So this applies to all of them. They will receive an extra payment of £1,000 for employing that young person, and the provider will also receive £1,000 for training and supporting that young person. Now, as we were asked before, one of the questions was, these are paid in equal installments installments at 90 days and 365 days, or 3 months and 1 year. They are initially paid to us, the training providers, who are then expected to pass on the £1,000 to the employer. Of course, the employer could direct this funding back to you if they wish to add and enhance the funding that's available to support the training and assessment of that young person. So that's in response to one of the questions you posed. If we move on, Marek, then to the next slide, because obviously what we're looking at is what's happening as a result of the consultation. As a result of the consultation, there was some concern that particularly for frameworks delivered to 16 to 18-year-olds, there would not be enough in the new funding bands to cover the cost of supporting those young people. So those concerns were raised. So what we've done is, and what's been done as a result is, there will be a retention of the £1,000 incentive payment to the employer and £1,000 to the training provider for anyone that's 16 to 18-year-old on a framework. It's only frameworks, by the way, and that also extends to 19 to 24-year-olds who are formerly in care or in care with an education healthcare plan. But then the provider will also receive a payment from the government equivalent to 20% of the funding band maximum for that framework, in addition to the price that they've already agreed with the employer. And that's why you see that that comes to you in installments spread over the months of the apprenticeship, 80% on on monthly installments and 20% on completion. Again, this is coming to you, the provider, directly from the government, and for a levy paying employer won't be deducted from the employer's digital account. So very good point to note there, and I think that helps to answer Lee's question. Moving on to the next slide, you can start to see that there are more general ways of supporting young people, and that is particularly important for employers that have less than 50 employees, because these have got a very good record in employing younger apprentices, and in order to incentivize those to continue to take on 16 to 18-year-old apprentices, they will not be required to co-invest. So they will be identified as small employers using the employment status monitoring field in the ILR, and the government will pay 100% of the cost of the apprenticeship that you've negotiated either as a price or up to the maximum band with that for that particular apprenticeship. Now this also applies, by the way, to 19 to 24-year-olds with an education healthcare plan who are employed by an employer with less than 50 employees, and also for a 19 to 24-year-old care leaver. One point to note, and by the way that's in addition to the £1,000 payments, which of course are paid in a different way, that in this case the co-investment is waived from the based on the size of the employer at the start of the apprentices program. Now, should the employer then grow to over 50 employees after the start of the apprenticeship, the co-investment will continue to be waived, so they will not be required to make a 10%. However, if an apprentice transfers from one employer to another but stays on the same apprenticeship, then the size of employer and obviously the age, because they might have turned 19, will determine whether the co-investment is weighed with the new employer. So just be aware of some of these, what I call technical rules, that are critical when it comes to looking at the way that things will work after the 1st of May. And I know that's in response to a question that one of you just asked me about if they move to a different employer. Okay, if we move on. In terms of additional support in areas of disadvantage, this was coming out of a concern where if we removed additional costs such as the area cost uplifts and disadvantage uplifts, we would have made it very difficult, certainly, to recruit apprentices from deprived or disadvantaged areas, but very important for some providers who often have that profile. So what's been agreed for 1 year only, subject to some review, is, and this only applies to frameworks, and again, just to remind you, this only applies to frameworks, that they're introducing from the 1st of May a simplified version of a disadvantage uplift, which pays £600 for an apprentice that comes from the 10% most deprived postal codes, £300 for the next 10% of deprived, and for the least deprived, that's roughly 7%, a payment of £200. These are all based on the index of multiple deprivation. Now they'll again come directly to you, the provider, and not be deducted from the employer's digital accounts and won't form part of the price that you negotiate with the employer. Excuse me. These will also be earned in 2 equal installments at 90 days and 365 days. So you can see from the way in which funds will be flowing into your organization, be aware of the ones that are coming to you on a monthly basis, the ones that are coming to you in the last month for completion, and the ones that are coming to you in month 3 and month 12, which relate to those additional payments. Critical when you're actually, as a provider, planning your cash flow and the income and expenditure that will be associated with apprentices, whether it be on frameworks or standards. Can we get payment of co-investment all up front and evidence on the ILR every 3 months? I think we've had this question before. Karen and Richard, when I asked the SFA, they said, yeah, obviously if you could encourage the employer to make the 100% co-investment payment up front, in effect, you've already satisfied the condition for the remaining monthly installments to be paid to you. So I think that would certainly facilitate cash flow and also would certainly get a full commitment from the employer that way. So a good question, because obviously if you put into the first 3-month return the actual value of the co-investment and it's equal to 10% of the value of the price or of the funding band maximum, if that was the price, then clearly you've met the requirements. That will then obviously facilitate future payments of installments as well as the completion. Next slide. I think for employees and apprentices that have got additional needs, there are obviously some payments that were made to all employers irrespective of size. So for example, we've already said that 19 to 24-year-olds with an education healthcare plan or 19 to 24-year-olds appears to be in the care of a local authority will be treated the same with 16 to 18-year-olds. I think also to understand that payments come to you will also come to you for any learning support needs that an apprentice might need. That's arising from a learning difficulty or a disability. If we move on to slide, that will tell us how it's going to work. Just waiting for the next slide to come up. So learning support funding, remember the process, this is a key thing here just to remind all providers, and we've had this question from several already. What do we mean by learning support? We've got to mean that which is additional to the support you would provide anyway, per se, for any apprentice undergoing a framework or a standard. So this has got to be on the evidence that there is an additional need. There's got to be an assessment, you've got to plan how best to meet the assessment, and then you've got to deliver that additional support to the individual apprentice and record that appropriate in the ILR. If you meet all of those conditions, then you can claim a fixed amount of £150 per month through the ILR for as many months as you believe that it's necessary that the apprentice gets that support. If the £150 in any month is not enough, then you can use what we call excess learning support to with evidence to show how much the extra support was above £150 in that month. That can then be claimed through the earnings adjustment statement. Remember, in terms of your conversations with the Skills Funding Agency from the point of view of funding, essentially you've got 2 ways of conversing with the Skills Funding Agency. And that's because of the data that transfers from you to the agency through the ILR. The second method, which is used to calculate funding, is the earnings adjustment statement. And that provides the information about apprentices and the learning where the ILR can't satisfy it. So we use the earnings adjustment statement. We can also use the earnings adjustment statement if you find that through a break of learning, you've got to deliver the learning support in less than 1 month, and the £150 won't be generated because the person's there less than 1 month. They won't be there on the last calendar day in the month, then you'd use the earnings adjustment statement for that. So moving on, we can, and the earnings adjustment statement, by the way, I would suggest that you're doing that on a monthly basis with, say, quarterly review. In terms of any apprentice whose learning support comes to more than £19,000, then they would be eligible for what we call not excess learning support, but exceptional learning support. That type of funding would come to you from the Skills Funding Agency, from central funds as the provider. However, you would need a confirming letter from the person's local authority why that person, if they were 19 to 24, did not have an education and healthcare plan. So remember, you need that as a condition. This also means that, for example, say that you've had to continue to deliver English and maths, say the functional skills, up to level 2 beyond the end of the apprenticeship program end date. If that young learner needs, for example, additional support to complete their English and maths, you can continue to claim through the ILR or the earnings adjustment statement any additional learning support funding as long as the apprentice is eligible. Remember, learning support is fully funded. The employer is not required to contribute anything towards the cost. So again, it's based on a thorough analysis and audited proof of the actual cost being incurred by you. So when you're looking at this, additional payments such as learning support funding are not subject to the funding band maximum. They wouldn't be included, for example, in any negotiations with the employer when you come to looking at the total price. So good question there. Let's move on to the next slide. Yes, another example of additional payments is English and Maths and apprenticeships. We've run separate webinars, by the way, on learning support and apprenticeships, but also in English and Maths. For all employers, irrespective of size, the government will make a payment directly to the training provider on evidence that the person is doing the appropriate level of English and Maths. So it could be level 1 and 2, depending on what's required in the framework of the standard. It is 100% funded on program installments. There's no completion element. And of course, again, this is coming to you as the provider on the evidence that you put in the ILR about that appropriate level of English and Maths that the person is studying. As we said in another webinar, this again would not be taken from the employer's digital account and wouldn't be part of the price that you're negotiating. But obviously it's critical when you look at things like, you know, the discussions we'll have around, for example, off-the-job training. You know, and the expectation is that off-the-job training will be 20% of the amount of training that the person does, as opposed to the on-the-job training, and that will be used for theory, practical training, learning support, is that the off-the-job training does not include English and Maths. So we're assuming that that's in addition to that 20%. Just one thing you've got to note. I know many of you are delivering it by asking the apprentices to come in on a day release or block release method to your organisation. So just be aware of that. If we're looking at, by the way, what evidence, going just back now to a couple of questions. If you've got an employer with less than 50 employees, what evidence? Well, that will be the evidence. You'll be using that source of evidence and putting that onto the appropriate part of the ILR, as I said. So the small employer, if I can just remember what it would, let's have a look. The additional payments would be, just a second. Yeah, extra support for more employers. Small employers must be identified as small employers using the employment status monitoring fields on the ILR. The eligibility for being an apprentice, by the way, and Carol's got a good question, does the term in care of local authority also relate to asylum seekers? Again, have a good look, Carol, at the rules that apply in terms of who is eligible to be funded and in what circumstances. So again, I can't answer the specific question, but I think if you have a look at the eligibility rules, you'll also see what applies to those that are seeking asylum seeking or refugee status, or those that have got special leave to stay. Richard asked a question, with the new standards, an apprentice is required to pass level 1 functional skills, then must undertake level 2 due to the new funding rules. Are providers eligible to claim for the functional for the level 2 functional skills? Well, the discussion there is always about what the cost of the additional functional skills, how you're going to get that in terms of making it clear that that is coming out of a funding that's going to be paid to you by the skills funding agency and not by the employer. In which case, obviously, if that is a key thing is going to move the person forward, and they've already achieved a level 1, but you're then saying, well, it's good for them to move on to level 2, then I will check on that. Again, I think that would be a reasonable thing to then profile and make a claim for. I think in exceptional cases, for example, you can claim the funding for programs of English and Maths which are below the level that's required for completion of the framework, because obviously the learner might be at entry 3, not level 1, and vice versa. They might be moving from level 1 to level 2, but need that extra support to get the level 2. And I think that the only thing I would say is that would not extend to including transfers onto GCSEs, because that wouldn't be necessarily an appropriate use of that funding. But I'll come back on that. It's a good question. Can we move on to the next slide? Yeah, now for all employers, irrespective of size, I think it's important just to note that in terms of apprenticeship payments and performance management, any apprentices that have been on programs before the 1st of May will be funded using the terms and conditions that were in place before. That means that those existing contracts will continue to conclusion, and that's whether it be a framework or a standard. Now, what is critical is to make sure on no accounts that an employer can then use the levy, which will start after the 1st of May, to pay for any of those previous starts. And I think because they're quite separate contracts here, and that's actually one of the things that's built into the contract between levy paying employers and the Skills Funding Agency. So the rules that we've been talking that currently apply are the ones that apply before the 1st of May for any starts. Remember, the funding for apprentices that start after the 1st of May be included in a separate contract and a different contract arrangements. So I think there's just a couple of things there to note, that there's only one big change there, and it's the performance management rules for your existing apprentices will carry on as normal, but there is one change to be aware of. Grant-funded providers, predominantly colleges, from the 1st of August 2017, we'll be paid on the basis not of a profile with 3 what we call funding claim points. You'll be paid on the basis of actual delivery each month up to the contract value for the financial year, and that's going to be the same for starts after the 1st of May. So that's one thing that I think I just wanted colleges in particular to note. Moving on, Marek, to the next slide. And there are lots of questions coming through, more than our ability maybe to answer them all, but we'll come back to them once we finish the recording. Let's now just finish off by having a look at if you want what the arrangements mean for employers that pay the levy. You know that they pay the levy to the HMRC through the PAYE process along with tax and national insurance contributions. They'll then be able to access their funding through their digital accounts, which obviously are going to be available, and then obviously they'll see each month what's available within a few days. The money will then be transferred into those accounts through the tax system and obviously out of the account to pay for any apprenticeship activity. They will then get a 10% top-up from the government, and they can use that to pay for training and assessment on a monthly basis up to the funding band maximum or the price that's negotiated. They will have up to 24 months to spend what's in account, and that will be done on a first come, first served basis, so first in, first out. If we move on to the next slide, you can see how this might work. So here's an example of a large employer with a pay bill of 5.4 million. The levy is £27,000. 15,000 allowance, which we all get if we're large employers, which means that they will only pay £12,000 into their levy funds. There'll be a top-up of 10%, which is the additional £1,200. So you can see that the levy payment that the employer, let's assume this is a fairly regular payment schedule, will be £1,000 a month. The top-up will be £100 a month, and then their earnings on apprenticeships will then be taken out each month. You can see there's different amounts reflecting maybe different numbers of apprentices or different size programs, and the balance on account will be kept up to date reflecting what happens each month. And obviously what happens but if month 2 isn't using all the money, then within 24 months, by the time they get to month 26, that money will be lost. If we move on to the next slide, you can see that those employers, the large employers who are levy paying, will have digital accounts from the 1st of May. Those employers will have to make sure that the level of funding in each month is enough to cover the expected costs or the earnings for apprenticeships, whether it be frameworks or standards. So the amount they put in will be obviously a fraction of the employer's paid to work people living in England. In most cases that's going to be 100% plus 10% on, or the top up. 20% is then held back from the digital account until the end of the apprenticeship, when either the framework is completed or the end point is completed. And again, you have to use the appropriate field on the ILR there, which I think is the completion code, which I think will be 2. Yep, and to show that the framework, that all learning is completed or the endpoint assessment is completed. And then it's 24 months on a first come first basis, first in first out basis, either through payment or expiry. Again, as I said, if you've not used FAS, the funding, I think you've been able to get it certainly from Nick Linford or through Smart Assessor. It's got enhanced features, but I think it's a very useful way of modelling what's going to happen there. Moving on then, we can start to see what happens, and let's have a look at some examples. So here's an example, for example, of how the priority is going to work with digital accounts. Let's assume, and this is quite critical, because each time an apprentice is signed up or added to an employer's account, they'll be allocated a priority order. Now that priority either can be either by the date that they were added to the account, or if 2 apprentices were signed up on the same date, then by the unique learner number if they share that start date. And here's an example. So we've got 2 apprentices. The employer's got a start balance of £800 in a digital account. Each apprentice's earnings are £500 for the cost of their apprenticeship. So you can see that apprentice 1, who's the priority order, so they were added to the employer's account before apprentice 2. The start balance was £800. It's £500 that has to come out that month to cover the cost of that person's apprentice. So there's £300 left. There's no requirement to co-invest that person. When you come to apprentice 2, who is in priority order number 2, there's only £300 left, and yet it's going to cost £500. So we use up what's in the digital account first, then the remainder, which is the £200, which is the outstanding earnings, 90% of that will be contributed to by the government, and 10% will be contributed to by the employer. So in this case, if you were working with this employer, you would still be asking them for a £20 contribution to the cost of apprentice number 2, whereas they would have used their digital account to pay for the full cost of apprentice 1 and a proportion of apprentice 2. So that's the way it's going to work, and I think that's absolutely critical. We understand this when we're working with those employers who will have digital accounts, which will be, local authorities, our own neighbours. If it's a neighbouring college or training provider, will often have pay bills of over £3 million. That's how it's going to work. Move on to the next slide. And by the way, I'll come back to that question. Question that just asked, by the way, if an apprenticeship lasts longer than 24 months, will the funding be committed and not expired? Well, we're assuming that on some apprenticeship standards, it's a chance that there will be 36 months long. We're assuming that you will have used up those first few months as quickly as possible with those apprentices. So there should not be an expectation of expiring, unless, of course, there's no the employer's contributions go in for the first few months into their digital account, and there's actually no take-up of apprentices at all. In that case, it could expire. That's why I think it's important that we are encouraging those large employers to make sure they have as many apprentices recruited from the first month of payment towards their costs. through a digital account. Remember, they could go a whole year paying money into the digital account, and those will just expire if they haven't used them up, say in the following year, so certainly within 24 months. So here's an example, by the way, how it might work for a levy-paying employer, because that's one of the questions you've asked. Let's just say that this employer chooses an apprenticeship in Band 11 with a maximum price of £15,000. You're the provider, you negotiate a price of £16,000 with this provider because they see the value in it, you're able to sell the upsell, the value added that you're offering, the enhancements you're offering with the provider, and but it's agreed it's 24 months. So the employer will make the £1,000 payments, first of all, because the funding band maximum is £15,000, so the £1,000 will be paid to you, and that's a separate issue altogether. They pay you, and that comes to you. That doesn't come into the purview of the way that the digital account will work. Let's assume they've got a digital account with sufficient funds in the digital account. So the monthly instalments, if you look at 80% of the £15,000, is £12,000. That's then spread over 24 months. So each month there'll be a £500 earning or debit from the employer's digital account for that particular apprentice. Excuse me. In month 24, we can assume that there's a successful completion of the apprenticeship, and that £3,000 will then be debited from the employer's digital account on the assumption that that has got enough money in it. So the digital account, which has got obviously all of those monthly contributions from the employer into the digital account, will have enough to pay for it. And that's how it will work. If you look at the second example, which is the next one, so if we pick up number 2, then here it's exactly the same scenario, but in this case, there's only £200 left in a digital account each month. So let's have a look at the monthly instalments. First of all, it's still £500 that we need to cover the cost of this apprentice. There's only £200 in the digital account. So that's taken out first. Then the remaining money is then contributed to by the employer. And that employer then will say, look, if there's only £200 in the account and we need, £500, then obviously what we've got to make sure is that the digital account, which has only got £200 in it, will then require co-investment of 90% of the remaining funding, and that is, and I think one of you has already spotted the little error here, and that is, you can see it, is that the £270 will be coming from, it's 270 and not 450. Well spotted. Thank you for that, because it's 90% of the £300 and 10% of the £300. So the two payments there are one of £270 and one of £300 and one of £30. If you look at the completion element, which is £3,000, £200 is available in the account. That means there's £2,800 that will have to come from co-investment. The government puts in 90% of that 2,800, and the employer puts in 10% of 2,800. So, Marek, when we get the slides to send out to people, can we make sure that on the monthly instalments, the government co-investment is 90% of £300 a month, it's 270, and the employer co-investment is 10% of the £300, which is £30, because the £200 has already been used. The first £200 of that £500 has already come out of the employer's digital account. So we just had a bit of a transposition error there, but well spotted by one of you. Thanks very much for spotting that straight away. We'll make sure that that's corrected by the time you get of it. Okay, let's now move on to a non-levy paying employer. And you can see why FAS is so helpful. They won't be able to use the digital accounts until at least 2018. Once they've chosen the appropriate training provider to deliver to the apprentices they want, and obviously also an assessment organisation if that's available, then they'll be asked to make a 10% contribution to the cost of training, and the government will co-invest in 90%. This again is based on that 80% on programme and 20% on completion. They will be the employers will pay the provider directly according to payment schedule agreed with the provider, and this will need to be verified by you, the provider, and one of you has already asked that question. This must be a financial transfer in cash. So in other words, you have to have evidence in your books, whatever kind of organization you are, that money is coming into you from those employers on a regular basis, or as one of you said before, even if it's all paid up front, you've still got to have that evidence. So let's have a look at the example then, the same example as we've done with the first two, and hopefully this one's right. And here you can see it's the same scenario. It's a £12,000 spread over 24 months. The government co-investment will be £450 because it's a non-levy paying employer, and you will be expected to pull in £50 a month from that employer. So every 3 months we'd expect to see at least £150 being put into the ILR as the contribution from the employer, and it's every 3 months that we'll be doing that. In terms of the completion element, which is 20% of the £15,000, remember it's 20% of the maximum funding band, then it's £3,000. On completion, the government will give you 90% of that, that's £2,700, and this is something that a lot of us did not expect, but it's clearly going to be the case. We will then ask the employer to co-invest 10% of the completion element, that's the £300. So remember, the completion element has also got an employer co-investment element to it. And obviously that will be dependent then on how you get that last amount of cash in that month. So in effect, you'll be asking the employer in that last month to pay you £50 for the instalment and £300 for the successful completion of that program. And that can include, of course, the endpoint assessment costs. So that's looking at how the two situations might apply to levy and non-levy paying employers. Move on, Marek, on to the next slide. And I think there's another couple of questions that I want to ask. Yeah, one of the things that one of you has asked is how is this all going to relate to the amount of data we collect and the information we collect and how this is going to apply. I mean, one of the key things here is that there is going to be obviously a need for you to look at matching the data between the apprenticeship service and obviously the ILR. And we know that the provider will include all the information about the learner in the monthly ILR. The data matcher process, which will obviously work only with levy paying employers because they're the ones that are going to be using digital accounts, it's going to be checking the detail that's been added to the apprenticeship service against the ILR data. And obviously that information will then be fed to you on a regular basis as a provider on the hub. So you might be able to identify any anomalies. So you'll be looking at things like the earnings in each month with the government and employer contributions, the indicative earnings using the data that's being matched with the latest apprenticeship service data, an indicative data match report based on the last apprenticeship service data. So you should have time to correct any discrepancies between the ILR period closes and also be able to submit your ILR in good time. That's the sort of logic, that's the theory behind it. So you will then return your final data return for the period, the ILR return period closes, the SFA runs the data match on the final monthly data, employer account balances are checked, and appropriate funding is assigned to each learner. That's hopefully what's going to happen. Those apprentices that pass the data match will be funded, and then you'll be paid within 6 months, sorry, that was a mistake, within 6 working days of the close of the ILR. So that's when the payments will come to you. And I know a lot of you are asking how this is going to work, but also you also receive the following reports at the end of the ILR submission window. Earnings in a month with the government and employer contributions based on the latest levy data, indicating which employers need to be contacted to invoice for direct payments. A final double lot report based on the latest apprenticeship service data. And by the way, they'll also process English, maths, learning support, and any other incentives in the same way as these need. So hopefully you as providers will have that information up to date, and also the employers can see the updated funding information in their digital accounts. So I know one of you asked how that was going to work, and hopefully that's met the needs. If not, we will run a separate management information session just on how this is all going to work after the 1st of May. And last but not least, and there was certainly lots of good questions. Yeah, I think we will definitely, Samantha, we will certainly be running more on that. Now, what concerns, I'm talking here as a provider, there's also going to be an employer, a levy-paying employer. Well, we've got some concerns. First of all, we're still concerned about the fact that even though we're now clearer on how the thing is going to work, on the mechanics of it, the operating guide is very clear, we're worried about the fact that the attempt to simplify this has meant that some of the things that we were quite familiar with, like disadvantage cost that weren't based on the 3 rates, the cost of supporting younger apprentices, they've been lost a little bit, and there are still going to be fundamental questions about the viability of provision, because sometimes what the new funding bands are for those frameworks are a lot less than we're currently getting. It will obviously encourage us increasingly to move over to standards, we know that. My apologies for still coughing. The other thing to note is, although this is simpler for employers, although employers will say, wait a minute, I don't see how that is much simpler than what we've got now, I think we're used to a lot more of what I'd call the spaghetti that sits at the back of most of these things, where there's a lot more complexity. So I think there's some issues there. I think the 20% uplift to bands and additional payments is still not enough compared to former rates, and we've got to argue that this is still an issue about the future viability. I think also to note that a fair number of the changes that occurred after the consultation are only 1 year or transitional, and therefore we don't know whether some of these additional payments or incentives will still be here after a year. I think from an employer's point of view, employers originally thought that the only thing they needed to do was contract directly with you. This is levy-paying employers. Their concerns are now that there's an additional layer of administration because they must have a contract with the SFA, and that obviously has got clear indications as to what might happen if there's any sort of practice that falls outside of the rules and regulations contained within that contract. So for example, all of us I think have got to be aware of what the implications are for things like of attempts to bribe, even though that's not what the intention is, but that's how it's construed. So for example, like paying employers to choose a particular provider is simply not on. And I think therefore we've got to look at how that contract is going to be interpreted. So I would suggest to all employers, but also all providers, have a good look at it. Remember, that only applies to levy-paying employers. The last slide, Marek, if you just pick up that. And certainly for us as providers, we've still got major concerns about, even with that greater knowledge of how this is going to work and how the details of it going to work, although we still haven't got questions, and I will come back, by the way, to look at what's going to happen with a higher level of functional skill if that's pursued by the person who's actually going to claim funding for that. That was one of the things that I wasn't totally certain of the answer. I gave you an answer, but I'll look at that, and I'll also pick up some of the issues around care leavers. But I think what is critical is that if you take all of this and run it through any system such as FAS, although the primary thing there is to help employers, it's also going to be useful for us to say, well, is this going to make our provision viable? Because if we know what it's going to cost, then I think we're going to say, for example, have frameworks and our standards been allocated to the funding bands, and are those funding bands making sense to us in terms of what are the intrinsic costs of providing that framework a standard? One of you has already asked the question, what about employers that find it difficult to make the 10% contribution? That's going to be, I think, a constraint on some smaller employers. The lack of a lower band limit to any price that's negotiated between the employer, I think, must be an issue there about the race towards the bottom in terms of quality. We've already raised concerns about the payment schedules and what that means in terms of cash flow, but also the requirements of the ILR. The impact of the 20% completion element, that is a significant impact because it applies not only to the price that you've negotiated or the funding band, but also, as we know, to that 20% uplift. that's there for frameworks in the first year. I think the removal of some cost factors will still make it difficult for some of us to make provision in some parts of the country. And I think even when we look at those additional payments, those incentive payments, do they reflect the real cost of providing a framework or a standard to a person coming from a disadvantaged background, maybe with some of those attendant issues about literacy, numeracy, etc. I think the ultimate issue, and one of you has already raised it, is that if we're looking at the way that this is going to work in practical terms after the 1st of May, and I'm just thinking about, for example, the performance management of old contracts, new contracts, changes to, for example, the way in which payments will be made, changes to the way in which performance will be managed in terms of claims, moving from grant towards actual, then I think there's sort of significant issues about 3 funding systems running at the same time and what that's going to mean to us as providers. So hopefully that's helped you to understand some of what I'd call the operational nitty-gritty operation of apprenticeship funding after the 1st of May. Are there any other additional questions or things that I've not covered? And I know that I will come back to look at some aspects of the questions you've posed. You posed loads and loads of questions, so I'll come back to some of those, particularly when I'm not happy that I've answered the question fully. But thanks very much for those questions. And are there any further questions, Marek, that we might... Do you want to close the recording down and just thank everyone for everything they've done so far? Yeah. And then obviously we'll take some questions outside the recording. But absolutely. Thanks very much for all those questions, and thanks very much for all the... we will certainly run future webinars on the ILR and data requirements in response to, yes, Samantha, in response to your questions. And also, yeah, we'll have a good look at functional skills again inside apprenticeship frameworks and standards. It'd be useful for those of you maybe that didn't get a chance to attend. We did a webinar last week on learning support inside apprenticeship, the new apprenticeships. That, by the way, is available only at this point to subscribers and those who paid. But that might be an incentive to look at some of those additional services that we offer. Thanks to White Rose for being our partner today. Hopefully they found that useful. And also to our colleagues that have been regular subscribers and partners on these webinars. If we close the recording now, thank you, Marek.
Yeah, I'm just about to do that now. So you'll all be receiving a copy of the video recording and slides as usual, and I said I'd encourage you all to share these with your team as well. Don't forget the next week Bees is also going to be running a session on the 28th looking at ESOL funding for 2017-2018, so that might be useful for yourselves or indeed some of your colleagues. And also next week we've got some sessions with Bob Craig as part of the Teaching and Learning Suite, where we're looking at verbal feedback, questioning, differentiation. So that's something that I know will appeal to certainly some of your colleagues there, so don't forget to let them know about those sessions. So just want to thank Bees again, because he really has been suffering with flu, and you might hear that he's having a little bit of a cough at the moment, so I'll just give him a chance to grab some water before he comes back to us and answers some of those questions. I am conscious of the fact that I think one of the two of the questions may have slipped under the radar, because just due to the sheer volume that we were actually receiving from the big group. In the smaller subscription groups and pay-for groups, we tend to keep the group sizes down to around about 10 or 15 participants. That way we can really investigate some of the questions. But no, I really appreciate those that you've sent us now. If we don't cover them now, we will have a look at them and we'll address each and every single one of you individually with those responses. And then if it's okay and you're happy with that, what we'll do is we'll share those answers and responses with the rest of the attendees. Thanks, Beej.